Just to introduce our panel, first we have Holly Newman Kroft. She's Managing Director at Neuberger Berman. Then we have Liz Weikes. She's an Executive Director and Financial Advisor at JP Morgan Securities. Then we have Cheryl Young, Managing Director and Senior Portfolio Management Director at Morgan Stanley Wealth Management. And then last but not least, our male representative, Gregg Keele, a private wealth advisor and managing partner at Acuitas Financial. And we should also say we have diversity of the United States here because we have these two ladies are from New York City. Cheryl is from the West Coast, and Gregg Keele is from Indianapolis, repping the Midwest hard. And we are going to totally get a really good feel for what America feels like today. All right, so this is under the panel. The thing is, okay. So the question that you guys just voted on was really interesting, and it goes right with our first question, because I think for myself and perhaps for some other people today, it's not immediately clear to me why a woman might have different financial needs than a man. So I want to use myself as the test case here. And Cheryl, we'll start with you, because let's assume a scenario in which I'm your client, and I'm a 32-year-old woman. I'm currently saving up for big expenditures, as you guys correctly guessed, saving for my non-existent children, saving for a home, and retirement down the line, feeling further and further away. So what should I be factoring into my decision-making that maybe my male peers don't have to do?
Yeah, I think it's an important question, and I think we could debate a lot about whether females should be even investing differently than males. I would argue they should, and the number one factor there I would cite would be longevity. We know women statistically live longer, and if you look at the biggest cost during retirement, it's healthcare. Healthcare is increasing at more than 6 to 8% a year is the range that we are estimating at. So if you think about a woman having a 50% chance of hitting 100 if you are now middle-aged, you have a very good chance of getting into those later years where you have high healthcare costs. So this chart actually really concerns me because only 3% of you think retirement at 65 is important. And at 32, you should be absolutely saving for retirement first. The second thing I would focus on is that women, unfortunately, tend to spend more than they make. And I found this statistic very upsetting and staggering. It's not too much of a surprise considering the credit card debt that's in the United States. But they are almost doubly as likely to spend more than they make than a male counterpart. So a woman has to have a strategic plan. She needs to focus on that balance. We tend to be caretakers. I'm a mom. I have 3 boys. We always want to take care of our children. But I think of it as putting the oxygen mask on the airplane down on myself first, making sure I'm getting the oxygen, and then remember they say put it on the child second. So this is really important. We have to make sure we're self-sufficient first, and we have to have a strategic plan. We are culturally really encouraged to spend, right? We all have our acquisitions of our purses and our bling, and we need to focus on our saving. And then the third thing I will cite will be confidence, and we can talk about that more later, but confidence is a big thing because women tend to underestimate their financial literacy and just their own awareness around financial products.
So I'm trying to introduce some conflict here. So Holly, do you disagree with anything that
we had this big debate on the prep call, and Katia picked right up on it. I agree with a lot of what you said. I think when you're 32 years old, what women tend to do differently than men, and you picked up on it exactly right, is that women don't maybe have the same financial literacy, the same level of comfort around finance and investing. And what our job is to spend a lot of time with them understanding their financial goals, wherever that chart went, what they want to save for, what they want to spend on, helping them understand the importance of savings. While the life expectancy for women and men is different by about 5 years now, when you're 32 years old, what your asset allocation should be is probably not different from your exact same male counterpart, but making sure that you understand how you're investing and why you're investing tends to be much more important for a woman than a man. Men tend to invest towards a target return number. Men want to make sure that their goals are reflected in their asset allocation. But at 32 years old, asset allocations change as life changes, as the world changes, as interest rates hopefully change. So I think factoring in life expectancy at 32 is not something you do as much as you do at like 72 or 62 or 52, especially in New York City and San Francisco. Indianapolis, I'm not so sure about, but living and supporting yourself here, we're happy if we can save and take care of our children and send them to school and do all of that stuff.
So you mentioned that men tend to save with specific goals in mind, and is it that you
tend to invest?
Intend to invest with specific, like reaching certain, and then would that be like milestones that they're saving?
It's more
for?
like I was at a cocktail party and my friend told me they got a 13% return last year and I want a 13% return too.
Is that necessarily a smarter way to invest?
No, of course not. Women are so much smarter than men on every level. Of course not. Women, if they get a 13% return, that's the end game. Making sure that getting that 13% return without taking too much risk, without putting their principal at risk, without understanding how they're getting there, tends to be more important to women than to men.
So a report by UBS that was released earlier this week showed that while women typically take care of the day-to-day expenses, almost 80% of them defer to men for long-term financial planning decisions. And a really surprising part of this study, because I'm a millennial and everything is about me, was that millennial women are even more likely to let men take the lead, which is, I think that's kind of surprising. So, Liz, in your experience, what's led to millennial women falling behind?
Sure. I think a lot of it is really looking at their gender roles of maybe their parents and how their parents paid their bills. But, you know, in going back to that article, there were points in there that I agree with and don't agree with. I think in the millennial generation, as they're coming of age and having families of their own, I think, you know, as a working mother myself, and you know, having 3 female business partners, which is total not genetic makeup of Wall Street, we talk about this a lot in the office. We're also the CEOs of our households, and I think at the end of the day, going back to what Cheryl said about healthcare, I mean, just the healthcare claims for a family of 4, I mean, is a full-time job in itself, and I think women are getting bogged down with not only healthcare claims but just taking care of daily, you know, expenses of signing your child up for programs or school, you know, and I think that's where a lot of women are getting bogged down. I also see, as a working mom in New York City, especially a lot of the moms blogs, I see women asking about 529 plans or saving for their children. Why are they asking on blogs? Because they lack the confidence that you're talking about, Cheryl. I think they feel that they just don't, even though women have come so far in Wall Street or, you know, in general, I think that they still lack that confidence, that they just don't feel comfortable asking. So they feel that they could be asking in a private blog. So that's really, you know, my thoughts on that article.
And I mean, that would definitely, basically that sounds like women are too busy, right, with the day-to-day items on their plate.
Absolutely.
To deal with the long-term stuff. But then obviously over time, that's just gonna lead to a bigger gap in knowledge and potentially wealth between the two genders, right? I mean,
Absolutely.
exacerbate that problem.
Sure. I mean, you look at, I mean, I have clients that, you know, are aging, and as, say, their husbands pass on and the women had no idea even what was in their estate. You know, I hope for the millennial generation that doesn't become that, but I just feel that women are so tied down with the daily routine of being the CEO of their home as well, that they just don't often have time to really think forward. And I think that's something we really need to hone in on. So
there's definitely a question there about whether those needs that I had, again, me being the center of attention here as I'm a millennial, that that whether or not my needs and my real needs and my perceived needs are actually being communicated to me and by other women by our financial advisors. So, you know, especially given that a lot of financial advisors tend to be men, we'll get there later. But you know, what should financial advisors be doing to actually communicate those needs and improve the experience of their female clients?
I think, like I was saying before, I think the difference between a female client and a male client, for me and probably for many of you, is you have to spend a lot more time up front with them. really understand what are their expenses, what's their Saks Fifth Avenue budget, what's their, medical budget, what's their caring for their parents, and what do they need to spend money on? How much money do they make? Do they anticipate continuing their careers? Because a lot of women take breaks in their career paths. They never go back. Really understanding their personal situation and their goals, and then really spending time communicating to them why you're recommending what you're recommending. Because they're maybe not as financially literate as their husbands, their partners, their brothers, their fathers, they do tend to defer, because you always back away from things you're not as comfortable with. But if you can clearly communicate, oh, well, you said to me, your grandparents lived to 200, and so your life expectancy is long, so we need to make sure you're maxing out your retirement plans. We need to make sure that you're budgeting for X, Y, and Z. And you want to quit when you have a baby, so here's why I'm making the recommendations that I'm making. Whereas men, most of them don't anticipate quitting. Some people do, and so you can expect, they just want to know that they're investing. Here's my goal. Let's get with it. I think women take a lot more time up front.
And is your broad experience that that there are a lot of financial advisors that kind of will pass over the opportunity to sit down and have those conversations?
I think because historically, and we've all been in the business a long time, historically, you've been dealing with men, and I always insist on, if it's a couple, I always insist on meeting the woman. I'm sure you guys do too. But you haven't had to do that. And with divorce rates going up, women, becoming unexpectedly single through death, divorce, choosing never to get married, we're all spending more time with women. And so we're learning how to talk to a female client versus talking to a male client.
By some calculations, women now hold the majority of the financial assets of the United States, or close to it. Yet they hold 40% fewer investments than men. So Gregg, why do you think that is, and what can we do about it?
Well, I think the comments that she just made are spot on. We start with listen, and maybe sometimes listen a little longer, but here I sit with three incredibly intelligent people, incredibly accomplished people, some from New York, some with kids, some without. We can start to make assumptions about these ladies and what I should be communicating to them or not, or I can listen. Right? So the first thing I think that we can do, and where we find we're very effective, is when we understand that this is not about products, this is about passion and purpose. Yeah. And so when someone comes into the office and we ask them, who are you? What do you want? What's important to you about money? Our parents left us with something. Either they told us how to really do well with money, or they told us how to really do poorly with money, and we're holding on to that. The way we spend money and think about spending money is about our psychology and what we've learned when we were younger and what we've taught ourselves since. That's all important to understand when we decide what we're going to do with our money. So if we're focused on that purpose in life, now, of course, retiring at 62, that's not a purpose, that's a goal. One lady I work for, powerful executive, her goal is to advance her value that all life is precious. So what she wants to do when she's done working for money is be able to volunteer every day at the no-kill shelter down the road. When we talk about her finances, it's not about what credit default swaps are doing in China. It's about how that money is a tool for her to reflect her values in living her life on purpose and in her purpose. And I think when we do that, whether with men or women, we do a great service, and we can say, job well done at the end of the day, because we know we're having an impact in this world that makes a difference.
It's just such a beautiful thing. Okay, we have the idea that they have different, that women have different goals, maybe don't have as much confidence in themselves, maybe don't have the financial literacy. So, Cheryl, have you found, you told me backstage you're an index product lady?
I do a lot of it, yeah.
You're like,
I love indexes.
I love indexes. Okay. So have you found that there are certain financial products that women stay away from or go towards because of their confidence level? Or conversely, is there a blame on financial advisors? Are they pushing women into one product versus another?
Yeah, I mean, I'd like to think of our job as not to push products. Our job is to find solutions, first of all. And the solutions are about what's best for that particular client. And to Gregg's point, it's all about what drives impact in their life. I find that with my female clients, the financial literacy is there less. And if you look at all of the numerous studies out there, about 25% of women feel confident in financial literacy compared to about 42% men. So it's almost double in the male counterparts. What's interesting in that is men tend to actually be overconfident. So when you actually give financial literacy tests to women and men, the difference in scoring is very, very minor between the two groups. Still a little bit in the men's favor, but not as much as you would think. And the men tend to overestimate, which leads to mistakes with risk and taking unmitigated risks and risks they shouldn't take, whereas women tend to shy away and not take action. So when I think about product, it's not ever about should I use an index or an ETF or a mutual fund. It's really more of I want to make sure that female I'm sitting in front of knows what an ETF is. I want to make sure she knows what an option is. I want to make sure she understands how to hedge a portfolio. I want to make sure she understands, to your point, 5 years. 5 years is a lot. If you look at longevity studies and how long money will last, 5 years will wreck a portfolio if you haven't planned accordingly. So she might actually need to take more risk than her male counterparts. Mm-hmm. And so thinking back to those tools and that asset allocation, how we think about risk, is very, very important. But I want to make sure she's walking into my office and knows exactly what an ETF is, and knows what a 40 Act fund is, and knows what an individual stock is, and knows what a bond is. These are terms that everybody should know out there. And it's funny, I was getting my hair done this morning for this panel, and the girl who's doing my hair was so adorable because she was like, well, what do you do? And she's like, I know what an option is. That's when you have an ability to buy something at a specific price. And I was like, that's amazing. I'm so happy that you know that. And she's like, I just feel so confident. And I just started laughing because she used the word confident. Mm-hmm. And that's how we approach things. And the sad part about this is that we tend to negotiate less because we just don't have that confidence. So we're not going to stand up for ourselves when it comes to pay raises. We're not going to stand up for ourselves when it comes to career changes. We think, okay, I'm having a child. Maybe that career option is not available to me. And it's just not true. There's no glass ceiling.
So it kind of sounds like the financial literacy isn't an issue as much as the confidence in the financial literacy. And kind of sounds like there should also be conversations being had with the male clients to make sure that they actually know what the products are that they think that they know.
Absolutely, absolutely. Because they come in saying, I know exactly what I'm doing. And you start, I'll have someone who talks to me about ETFs, and he's like, well, I always want an ETF because they're cheaper than a mutual fund. I'm like, really? Because that ETF that you're looking at has a 150 basis point fee drag on it, and this ETF has a 9 basis point fee drag. So ETFs are all not created equal either. But I started rock climbing a few years ago because I have 3 young boys, and I am terrified of heights. And my son would make fun of me because I would get up the wall, and I would never be able to get to the top. As soon as I got close and I could see it, I would start shaking. I was very terrified. It was just this fear would grip me. My lizard brain's working. All the cortisone's rushing through my body, so I'm not thinking straight. And once I had done it over and over again, I just scamper up now. I can get to the top. It's not a problem. And I still get scared, don't get me wrong, but it's just practice. So we have to practice so we have the confidence. And I think that women look at finance and we allow our lizard brains to take over because we're afraid.
So obviously, we mentioned this could lead to a divergence, or not a divergence, a widening gap in the future between the men and women and their wealth and basically the knowledge and everything that comes with it, right? So especially when it comes to the separation of the genders. So let's say if we have widows and divorcees, right? So Gregg, you work a lot with divorced couples, with divorcees. So what are you doing to try to fix that?
So we do specialize in divorce, and in many couples, probably in most of your lives, one or the other is kind of in charge of the long-term financial plan, right? One kind of goes along, and sometimes it's the man, and sometimes it's the woman. But that person going through this very, very difficult emotional time, for most of us, the worst thing we're going to go through in life. I did a combat tour in Iraq, and I've been divorced, and I'll take the combat tour a few more times before divorce again. Right? It's a tough time. So again, aligning that empathy we have with what that person's going through, and understanding that they don't feel confident. They don't feel in control. they don't have an ability right now to see a future that is happy and sunny, right? So to her point, sitting and spending a little more time in the beginning to get comfortable with that person and what they're about and what their purpose is. And maybe we don't talk about investments for a while, right? What we're talking about is, what is your life purpose? What are the things that are going to matter when you're gone? What are the things that are going to matter in the last week of your life? So let's focus on living a life that matters, and then we're going to use money as a tool to help you get there. And as that changes, we change how we deploy that tool. So sometimes we use options, and sometimes we use ETFs, and sometimes we use mutual funds, and sometimes we use hedge funds. That's all way down the path from where we are at the beginning to understand what we want. I promise you, if you spend your time focused on what matters in your life, those investment decisions, those spending decisions are going to get a lot easier, because it's not about, do I buy this Chanel purse today or retire at 62? That's a pretty easy choice, right? Chanel today.
It's not.
Right?
Buy the purse.
But when I'm making that decision in the context of, is buying this Chanel purse going to allow me to get closer to living in my purpose, on purpose, or not, that's a different decision than the self-discipline of saving for some future age.
Well, you have the added, complex problem of, are they taking this Chanel purse on the first date post-divorce? You got to advise on that too.
Right.
But what about when it comes to, a client sits in front of you, she's in her 50s, and she had been deferring to her husband for those financial decisions her whole life, and now she's in charge of her financial decisions, and she doesn't have that financial literacy or much confidence in her financial literacy. Do you take do you feel obligated to take an active role in catching her up, or is that not really your job?
Oh, absolutely. That's the reason we have a job, right? To help people deploy their financial resources in a way that gets them what they want is our entire job, right? That's our entire job. So absolutely, I think it's time for us to spend the time doing that. Whether we send them to a budgeting coach, or we send them to get some financial literacy in many different programs and ways to do that, or whether we do it ourselves, it's a part of a process to get from scared and alone to knowing that we're on a road to living on purpose, in purpose.
And Cheryl, you had also some thoughts about divorce, am I right? Mm-hmm. If you want to jump in, feel free.
I just think that women really need to be, again, armed with that level of financial literacy. I know, going through my own divorce, if I didn't know what I was doing, I would have gotten completely screwed. And not because he was so much trying to take advantage of me. That's another story. But because the lawyers really do not have a financial background. And it was very clear that the whole process, that his lawyer did not understand our finances and that my lawyer did not understand our finances. And both lawyers made a lot of mistakes along the way. I'll give you an example. We would have had an increase in our property tax basis because the way the lawyers did it, and I won't call who did what, but one of the lawyers made a mistake, and the property taxes on my house were going to get increased and almost doubled. It would have cost me almost $30,000 a year for the rest of my life had that mistake not been caught. And so when I think about clients going into a divorce situation, you need to arm yourself with an expert and know everything you can know, because if not, you could have mistakes like that could impact you forever. I mean, that's a mortgage in a lot of places.
And seriously, I've had 17 minutes of formal training in the law, right? I have no business giving anyone any kind of legal advice. But an attorney who's had 17 minutes of formal training in financial planning and investments is trying to split a multi-million-dollar generational estate from a marriage without the background, in many cases, to do so. So a certified divorce financial analyst and an attorney working together, one with the law, one with the money, is a great, great team. And anyone who's going through that or knows anyone that's going through it, I highly encourage you to put that team together.
But I would say the same thing when someone dies. I had a client whose husband died about 10 years ago, and I was at her house for many, many hours afterwards. She didn't know where to pay the mortgage, much less how to pay the mortgage. She didn't understand that there was stock in his 401k, that if you just rolled that over to an IRA, there was an NUA potential there that could have cost her thousands and thousands of dollars in taxes. And so again, taking the time, to Gregg's point, ask all those questions. Don't just start doing things. You have to ask a lot of questions and really dive in and understand what you're doing, or it can have severe repercussions on those clients for the rest of their lives.
The other thing with divorce is you have to often manage your clients' expectations, because a family that's together often can't afford two of the exact same lifestyles, and they've decided that salvaging the marriage isn't worth the lifestyle, but they want to live in the same lifestyle. They can really get themselves into trouble with debt, overspending, really losing sight of their financial goals to maintain a lifestyle that they simply can no longer afford.
And the attorneys, Holly, encourage that, in fact, because the attorneys tell you deserve this, but it's not possible. It's not possible to do that. So you're exactly right.
And your emotions take over, and I think that's the biggest problem in those meetings, especially where the advisor has been working with both the husband and wife for such a long period of time. You feel like you're stuck in the middle, right? And who's choosing the advisor? Who stays with the advisor? And I think when those emotions are at play, you are quickly making decisions that you shouldn't really be making. So I think that's even more so why, if you start earlier and have like the right plans in place early on, I think as life takes whether it's divorce or having a baby, I think these conversations are a lot easier. And decisions can be made a lot easier.
In that UBS report that you mentioned, you referenced earlier, I think all of the advice that was in that report that we probably all read was all of those women that have found themselves unexpectedly in charge of their finances wish that they had gotten involved much earlier.
Yeah.
That was a real consistent
Right. Even if
theme.
you only have $1,000 to start and you're 22 years old, that $1,000 at one day could be where your life takes you, depending on what job you take and how you invest your money. So it's, even if you're starting really small, planning is really important really early on.
So that leads us to our last question for today, because I think in terms of getting women more involved, right from day one, financial planners. Let's talk about that. I mean, I have 3 financial planners on my couch, not my couch, but sort of my couch, that are women. Amazing. Gregg, so happy you're here. But all my life, I've only dealt with male financial planners.
Well, that's a mistake.
Yeah.
Sorry, Gregg.
He's great. But you could have a team that has both.
Double team. So, Liz, I know this is a passionate issue for you. Tell us about what the industry should be doing to not only attract more women into these roles, but also to retain them, because isn't that a large issue, retaining them?
Absolutely. Well, as I said earlier, I'm a team of 4 female business partners, which is not the makeup that you'll ever see at most Wall Street firms. We have over 100 years of experience collectively between the 4 of us, and it's just something you really don't see that often. I think for us, we're 4 working mothers, just as the 3 of us are as well. Ironically, the 3 of us all have boys, so I don't know if we're going to raise really strong sons, I guess. But I think that something that I'm really passionate is about making sure young women can go into finance and can continue in that. A couple of years ago, I received a call from my alma mater, as everybody here probably does, raising money for the school. And it's a school that has a very large endowment. And they were asking for money. And I said, you know what, I will give the money, but this is what I want. I want a scholarship in my name for a female student in the business school studying finance. That's need-based, of course. And it was the first time anybody had ever given a scholarship for a female studying finance. And what I find is that the business school was filled with females, but none of them were actually, after, say, a 2-year analyst program at one of the large banks, they were really never going on from there. And it's something that I've been mentoring a lot of females, trying to educate them about the wealth management end of the business, because a lot of times when they go into the analyst programs in banking, they're spending 100 hours a week working. They're burned out. They're taking care, if they marry on the younger age, they're also taking care of, as I said earlier, they're the CEO of their household even before they have children. And I think they're just completely burned out, and they don't know how to have a family and also be able to be a working woman. Well, we've all been able to figure that out, as well as my business partners. And I think that this end of the business, we were talking about this earlier, Holly, in your early 20s, we were able to network and be out and sit with clients at all hours of the day and night and build up a huge book of business. And then I think that changes as you get married and have children. But I think that role evolves, right? So I think that if women are educated more in terms of, and have mentors of women that are, are successful in their businesses as we are, I think that, it goes a long way. I think that it's in education, that there is another role outside of, say, investment banking. And there are roles for women in finance that don't necessarily have to be, obviously we all work an enormous amount of hours, whether it's at home, putting children to bed, and then going back on email. But it's you don't have to be sitting at your desk. There's definitely a different way, and it's definitely a business that welcomes women. I think that the firms have really evolved in being able to help women succeed, and I think it's really educating and mentoring and really building a sisterhood and bonding together.
Great. Well, on that note, I want to really thank my panelists for being here today. Special shout out to Gregg.
Great, man.
And of course, all of you women. Thank you so much.
Thank you so much.